Good evening, I'm Michelle Caruso Cabrera, and welcome to the Kudlow Report. Larry Kudlow has the night off, but don't you worry, even in Larry's absence, we still believe free market capitalism is the best path through prosperity. So on tonight's show, it's more than a summer rally. Larry says it's a new bull market. U.S. markets hitting the highest levels of 2009, with the Dow turning in the best July in 20 years, 12 years for the S&P and the NASDAQ. The bears continue to get slammed, and it's the new bull market. But how long does it last? Is it too late to get in on the recovery rally? Let's dive in with our market gurus. We have CNBC contributors Jerry Boyer, Don Luskin, and Steve Grasso, plus Peter Schiff, author of The Little Book of Bull Moves in Bear Markets, and Peter Marisi, University of Maryland business professor. And Peter, I'm going to start with you. It says here that you're bullish. Is that because we've once again gotten data that indicate to many the recession has ended?
Well, the recession
hasn't ended. If anything, the depression is just getting underway.
I was talking to Peter Marisi, sweetie.
Oh, I'm sorry.
Well, the two Peters have opposite views. I think the recession is coming to an end. The fourth quarter is going to be a good quarter, and we got a lot more room to grow in this market.
The other Peter.
Well, you know, first of all, it's not a new bull market. It's the same bear market that's been going on since 2000. But, you know, what's happening in the U.S. is a sideshow. The main event is overseas. The markets are on fire there, particularly in Asia. I mean, the U.S. market looks like it's standing still.
Why are you skeptical of this?
Well, look, I know that the underlying fundamentals of our economy have worsened. They haven't improved. We have more debt now than when the recession began.
So the GDP coming off only 1% compared to the two previous quarters that were even more horrendous. The fact that continuing claims peaked how many months ago? None of that is good enough for you.
But at what cost? Look at how much debt we had to incur to get that quarter. We're going to pay for this. It's going to come back and bite us.
Hold on. One of the big things going on here is that American companies have trimmed themselves down, gotten much more efficient. Yes, there's a big market in Asia, and they're going to make money there.
Look at that inventory number.
Yeah, but the U.S. government is not trimming itself down.
Yeah, but the U.S. government has hardly spent very much so far. We haven't had much stimulus. It's going to be American companies selling abroad.
Well, they're issuing all this debt. What are they doing with the money? Meanwhile, there's a lot of companies that are getting propped up with bailout money. We'd be much better off to let them fail and free up that capital.
You're on the floor every day. What are your clients doing when it comes to fund flows? Do you see the money? Do you feel that this is still a bullish market?
I feel like my clients were skeptical 100 points ago in the S&P. Now they're getting more bullish, and that money has to come in off the sidelines. They're getting pressured around that 1,000 level in the S&P.
Don Luskin.
Look, I hate to disagree with my new best friend forever, Peter Schiff, but, you know, this is not like the same old bear market since 2000. This is the same old trading range since 2000. This feels very much to me like the Johnson-Nixon years, where for 16 years from about 66 to 82 until Ronald Reagan came in and cleaned things up, we were in a trading range for 16 years in the Dow, and it was a lot worse than a trading range. It was a bear market if you adjusted it for inflation. So it turns out that we've now been for a long time in the Bush-Obama years. We just didn't know it until we were 9 years in. You look back, nothing's happened with stocks. Inflation is back on the rise. But that doesn't mean you can't have lots of bull markets and lots of bear markets. It's a gigantic trading range. So let's get our definitions straight.
Sure, but meanwhile, as the dollar loses value, you know, we hit a new low for the year on the dollar. You know, the real value of U.S. stocks is going down.
Not on a trade basis. Versus what currency? That's just not true, Peter.
Well, no, the dollar got clobbered against every currency today. But if you look at the dollar index,
that doesn't mean it made a new low.
Yeah,
it just didn't. It just didn't. On a trade-weighted basis, the dollar is what? 10% off its lows?
It's a new low for the year. The dollar is headed lower.
For Peter, only if Ron Paul is president do we get to declare it a bull market. Otherwise, unless we're on the gold standard and all that other stuff, then every bull market will be a loser.
I mean, I love Ron Paul as much as the next guy, but we can't define bull market that way.
No perfect
Jerry Boyer,
exchange rate.
finish your thought.
All right, the Dow Jones went up because profits have improved. Profits have improved because American business is smart and they cut their costs. And that was in the midst of an extremely deep recession. Now, off of the baseline of those incredibly low inventory adjustments, we're very likely to get positive GDP in the third and fourth quarter. So now the top line goes up. So that is almost a guaranteed recipe for increased profits. It's not a boom, but it's a bull, and it's real.
And, Jerry, the only problem is that we're seeing on the floor is that we can trade to the higher end of the trading range, but the problem is once all these anti-growth policies come through, what happens to profits then? What happens to the tax plan?
That's for real.
And what happens when interest rates start to go up, which is going to happen?
Congress is out for a blessed month.
That's
very
right.
bullish. And then we've all had time to read the bad legislation, so we have a better chance to stop them when they come back.
Do I have a sense all five of you seem to think that if we see many of these social policies enacted, healthcare reform being, I assume, the biggest one, that would kill any long-term round.
Cap and trade.
It will slaughter the bull.
Peter Schiff, all the spending.
Well, obviously that's going to make a bad situation worse, but we're even further out on the leverage limb than we were a year ago.
What is this debt obsession?
And rates are going to go up. They can't stay down.
Debt is the only measure of how we're doing.
The Fed has parked a lot of bonds on the books of the banks, and they're sitting on them. Let's not say we're all leveraged out. It isn't like, you know, the consumers haven't been working down their debt and all the rest of that.
They've gotten started, but they're nowhere near in good shape.
How long is it going to take,
we've been
Peter
on a
Schiff?
spending binge for a generation.
So how long does it take for the consumer to get back to where it was? You think people aren't going to spend
money for a generation? Come on.
No, we've got to save money. We've got to get our savings rate up to 10 to 20% and keep it there for a long time.
But Peter Schiff, how long?
Peter Schiff, did you look at the GDP data that was released this morning? There was an amazing thing which I want to throw out as a challenge to you. Do you realize that the consumption share of GDP
went up,
hit all-time highs this last quarter? What that means is that this theory that the consumer is just completely falling off a cliff and will never come back, and we're going to be in 25 years of scrimp and save, has simply not shown up one iota in the numbers. So it's an interesting theory. As scientists, it's not in
we're digging
the
ourselves
data.
into a deeper hole. This is going to come to an end. You can't run an economy on spending other people's money. You run an economy on savings and production. We've got it completely backwards, and that's why we're in trouble.
And we're saving.
But we're not spending it. We're not spending other people's money. We're investing other people's money.
Let's make this
actionable.
actionable.
We're getting this money.
Jerry Boyer, what do you do right here based on what you believe about the market?
Well, if you're not in, you might want to wait for the next little correction before you get in, but I think we've got another little bull coming. And if you want to know where, I like technology because it's going to be a jobless recovery. Peter will get his inflation down the road, so you might want to start to get ready for that.
Peter Schiff?
Well, look, you can't be in cash and you can't be in bonds, so you got to own stocks. I just own stocks abroad. I mean, I think you got to be in Asia, you got to be in China, Hong Kong, Singapore.
Oh yeah, China.
You got to be in natural resources.
Peter, if America falls off the cliff, who's going to buy all of China's little lead paint toys?
Silver up 50 cents, gold was up $20. I mean, that's where you got to go.
Yeah, Russia and China, very stable. Great place to put your money.
Who's China going to sell their exports to, Peter? Who is China going to sell their exports to?
They're going to buy them themselves. They're going to buy them themselves.
Oh, yeah.
Don Luskin.
I want to know, what is the China story if the U.S. isn't there to be a customer? The idea that all of a sudden the Chinese are going to turn into a consumer society is just simply wishful thinking. There's not the slightest bit of evidence for it. It's an idea, it's a theory, it's interesting, it's a great narrative, but where's the data?
They can buy their own stuff. There's 1 billion Chinese. As long as their government stops buying our bonds and stops suppressing their own currency, you're going to unleash massive purchasing power in China.
That's a big if. That's
it's not an if. It's a when. It's
coming.
not
going to do that. That's not in their own interest.
It is in their interest.
They've been buying massive amounts of bonds over the last 12 months and have had their exchange rate absolutely fixed against the dollar. Yeah. And that's why once they stop buying those bonds and let the dollar fall in value against the yuan, we'll export a lot more to China, and they will sell a lot more in China.
What are we going to export? We don't have anything to export. They're going to export less to us, and they're going to consume their products themselves.
The most popular car in China are Buicks, but they won't let us make them there.
China is not El Dorado.
Don Luskin, what should people be buying or selling here?
Good Lord. I think the one place where it all comes together, where I think we could actually all agree, is I think on a global basis you should be buying natural resource stocks.
True.
Because no matter what happens, because the United States, we know for sure that we've got inflation in our future, right? I think we can all agree on that. So that's going to be good for natural resource stocks.
In our present,
we know that China is going to keep growing. It's not going to go into a depression. Whether or not it's El Dorado is another question. That's going to put pressure on resources. So the one thing that you know is going to work are resource stocks anywhere in the world.
Grasso, any ideas here?
Healthcare. I think most mutual funds are underinvested in healthcare, and as long as the Obama plan continues to be watered down, healthcare is going to be running into the year end.
But that's a big if, right? It's a big risk.
The more I hear talk coming out of Nancy Pelosi, I don't think it's going to be as watered down as we all hope on this panel, or 90% of us on this panel hope that it continues to be watered down the way it is. So it's a big if.
Well, we got to the August 1st hard deadline, and they missed it.
That's right. And if not, energy is where you want to be as well. It's not going anywhere. The alternatives aren't feasible at this point. And they're very subsidy based. So I would think that energy and healthcare, you could probably make a bet going to year end.
Peter Maurice, you get the last word. Any good ideas for investors?
Beyond commodities and healthcare, technology. We're going to be investing a lot in technology over the next 2 years. I think those stocks will do very well. All
righty. Good discussion, guys. Thank you, Peter Maurice. We're letting you go. Everyone else is sticking around. So coming up, banks and financial Welcome back to the Kudlow Report. You know what Larry says? Find a bank you hate and buy it. Let's see what our investors think about that. Here now is Dick Beauvais, financial strategist with Rochdale Securities, and our panel is still with us as well. Dick, we showed that bank index up 109% since the March 9th low. Is there possibly more to go in the financial sector?
Of course. I mean, I think that looking at it from the March 9th point of view is not the right way to do it. Take a look at it over a 12-month or a 24-month period, and you'll see that the bank stocks have not risen dramatically. In fact, they're dramatically lower than they were when this thing started. Therefore, if they get back to where they were, and I believe that will happen, we're just nowhere near where these stocks are going to go.
How's it going to get back? How are they going to get back to where they happen?
Well, there are multiple ways it's going to happen. Number one, if you take a look at the non-cash charges that are hitting the industry right now, and you make the assumption that they'll go away in a stronger economy, then the banking industry is actually showing the strongest cash profits that we've seen ever. We've never seen cash profits in this industry as high as they were in the first quarter, and I'm sure when the second quarter numbers are all completed, you'll see that the numbers are even higher.
What's driving all those cash profits? Is that basically the yield curve has steepened? What's behind that? What's
behind that is that the banks are overcapitalized. They have more reserves than they've ever had before in their history as a percentage of loans. They're highly liquid. Not close to 10% of their assets are in cash. The companies have increased their market share relative to all other forms of shadow banking. Everything is moving in their direction once this recession is over.
Don Luskin, are you as bullish as Dick Beauvais on the financials?
No, not. I'm the absolute opposite. I think there are one or two who are going to end up being the beautiful needles in a crummy haystack. But I think as a sector, it's basically wiped out as a growth opportunity. As far as I'm concerned, all the juicy stuff has been taken away from them forever. No more CDOs, no more subprime mortgages, no more SIVs, no more private equity fees. What's it going to be? Free checking accounts in the branches, giving away teddy bears? Come on, this is not a growth industry anymore. This is a regulated utility. Get ready.
That's an interesting take, Dick Beauvais. What do you think about that?
Well, I mean, I don't think that the banks made that much money off any of the products that we just mentioned. They make
they
loans.
Lost a lot,
they
in fact, didn't they?
Yeah,
they took a lot of capital losses, but that's where all the fees were. That explains all their growth for the last 10 years in the bottom line.
Very low-cost funds, and that's where their profits come from. And that profit source has not contracted, has not gone away. If the United States economy wants to borrow money in the future, they're going to have to go to the bank. And when they go to the bank, they're going to see that this industry is growing. These companies are going to show 500% increases in earnings over the next 5 years.
It doesn't matter what they show. I mean, the financials are a great place to work. They're a lousy place to invest. Right now, they're making money. They're borrowing cheap from the Fed. They're making risky bets, and they're bonusing out all the profits. But when the bets go bad, the shareholders are going to get stuck holding the bag, and the taxpayers are going to get hit with more rounds of bailout money.
This is ancient history.
No, it's
you
not.
have no concept of where the banking industry sits at the present time.
Oh, sure I do. I know exactly where it sits.
96.5% of the loans in the industry are paying interest and principal on a timely basis. That's not high-risk lending.
No, you don't.
That's common. That's lending to people.
They're risk averse.
Hold on.
Go ahead, Peter.
If you look at the financials that are generating profits, it's the ones that are doing all the proprietary trading.
Goldman
the companies
Sachs.
that are actually making real loans, they don't have big profits. It's the Goldmans, it's the Morgans. This is how we got into this mess. And Don
Jerry
Luskin
Boyer,
is right.
you wanted to get in there.
Yeah, well, look. Larry is absolutely right. For the short run, if you can borrow at 0 and lend at 5, you've got to make money. Just in regular banking. It doesn't have to be high-risk stuff or trading. Just borrow low and lend higher. Now, when the inflation comes, that might be a problem, but that inflation isn't here yet.
Steve,
now, I understand that some of these banks are utilities, right? There's two kinds of banks. There's going to be the banks that de-tarp, and they're great. Buy them like crazy. The banks that are tarped, they're going to be run like General Motors.
They're
Steve Grasso, with all the institutional clients, hold on a second. I want to hear what institutional clients are doing. What are we seeing with fund flows on the floor when it comes to these financials?
They made their bets, and with the secondary offers, they bought those, but they're not doubling down and tripling down at this point. So I don't see real funds going back into the financials at this point. But I actually do have a question for Dick Beauvais. Dick, my clients are looking more at Bank of America as the barometer for the market. Is that a flawed concept?
No, I think Bank of America is one of the best banks in the United States. I think that obviously...
Oh, what a statement.
Yeah, they would be broke right now if they didn't get
deposits
government money.
of the country, and you don't think that that shows enormous
They were dumb enough to buy
power.
Merrill. They were dumb enough to buy Countrywide. How smart can they be?
Wait,
One
Merrill
out
worked
of
out for
every
it.
$8 in the United States deposits are sitting inside a Bank of America. Do you understand the amount of power that is necessary to gather that much in deposits? Merrill Lynch is going to be a significant positive for this company. It has 16,000 reps that are selling financial products. It takes the bank out of the United States into places like India, China, Japan, where the bank needs to be.
They could have just let them go bankrupt, and they could have bought up those reps a lot cheaper.
I don't think so. I think that essentially, if you want to get into an industry where you're not a participant, you're going to have to pay up to do so.
Dick Bovee, is it indiscriminate buy across, or give us two names that you think are the very best?
Well, I think J.P. Morgan is the very best in the industry, and I think if you want to get a safe way to play it, buy Bank of New York.
All righty. Dick Bovee, thanks so much. Jerry Boyer, good discussion. Don Luskin, thank you as well. Steve Grasso and Peter Schiff, we're making them stick around. They have more work to do. Coming up, we run a tech check on the new bull market. The sector has ridden the rally up to now, but is it too late to get in? We're going to bring in fresh market recruits, drill down with tech analyst John Ford on how you can make a semi-fortune on semiconductors. In this new bull market, technology has been one of the best performing recovery sectors. Since the March bottom, the S&P Tech Index up over 50%. But is it too late to ride this technology rally? Joining us now, we have one of the best technology experts in the business, John Ford. He's senior writer with Fortune. And we welcome in fresh market recruits, Bill Smead of Smead Capital Management, Dan Fitzpatrick of StockMarketMentor.com, Steve Grasso and Peter Schiff are still with us. Guys, good to see you. John Ford, let me start with you. Can technology continue this tremendous run?
Well, I think it's too late to look to the indexes right now. Like you said, they've been up in a lot of cases 50% since March. So I think you got to be really choosy right now. I like folks like Microsoft. Microsoft's got Windows 7 coming out later this year.
How's that going to do? Isn't that the most important thing that we face right now, is how Windows 7 is going to do?
I think that's the biggest issue right now for technology, because that drives PC sales, and PC sales, they cut through business, consumers, so many things, and drive purchases of printers, peripherals, all sorts of stuff.
Bill Smead, what do you think?
Well, we like Microsoft, although we're really impatient with the management of the business. It's almost like a Michael Eisner kind of a thing at this point.
Ooh, that's not good.
We like Accenture. And we also like eBay. We think that as the internet usage grows over the next 10 years, that being the toll bridge of the internet payment system is going to be just incredible.
Peter Schiff, you're so negative on so many things. You're negative on technology?
Well, look, I own some tech stocks. I mean, my favorite tech stock that we were buying a lot of at the end of 2008 is up 500%.
Which one?
It's called Skyworth. It's in Hong Kong. And when we started, we were buying it at the end of 2008. It was trading at 1 to 2 times earnings. So now it's up to 10, 12 times earnings. But, the tech stocks abroad, if you look at the stocks that trade on the Hang Seng, you get better valuations. You can buy them at lower PEs. You get good dividend yields. I mean, we were buying Skyworth. It had more than a 10% dividend yield when we first started buying it. I mean, that's not the case now. But, I think if you're going to buy stocks in the U.S., technology, if you can buy a company that has a lot of exports, it's better than sitting in cash, because inflation is going to kill you. It's better than being in U.S. government bonds. But still, given the fundamentals abroad, you're much better off looking for your stocks outside the United States, where there's better long-term economic fundamentals and better valuations.
What are you seeing in terms of technology? And again, it is way too broad. You've got to look at either chip equipment makers, right. PCs.
I think Jerry Boyer brought up a great point before. It's going to be a jobless recovery. So you want to be in the tech space. But for the retail investor, you have to realize that this is not going to be totally insulated from the market collapse.
Hey, one thing about jobs, that's really what drives this whole thing. I hear this jobless recovery, and that to me means a short recovery. At some point, companies are going to have to take earnings into the top line.
Can I disagree with these guys?
Feel free.
Can I disagree?
That's what I love about this country.
At the end of World War II, we had 100% of our GDP in United States government debt from fighting World War II. We spent the next 10 to 15 years paying it back, and had 3 recessions in the next 14 years, and one of the greatest bull markets of all time.
Peter Schiff,
maybe it's just me, but I think we've changed a lot since World War II.
Let me finish. At the bottom in 1982, we had 1/3 of the total debt we have right now at 3 times the interest rate. Talk to any business person that was in business in 1982. They'll tell you that they were having to borrow at 20% prime. It was eating up all their profits. Smokestack America was in a depression. The auto industry was in a depression. Smokestack America was in a depression.
Peter Schiff,
and we had the greatest bull market in history coming off that.
Look, first of all, we're going to have those high interest rates, and the problem is the national debt, which is about $13 trillion, is the biggest subprime mortgage of all. It's financed short term. Interest rates are going to go up because we only have low rates because the Chinese and the Japanese and the Saudis have been foolish enough to supply.
All right, I'm going to cut you guys off because we are off mission here. This was a technology segment. This was a tech segment. John Fort, what about Apple? We got a lot of retail viewers watching. They love Apple products. They love Apple stock lately. What do you think about it?
Well, you know, I'm going to get in trouble for not being bullish on Apple. But look, they've done really well thus far. The 3GS was a big hit. They could have a big holiday season. We got to see what they do with their iPod announcement that they always do in September. But I think they've gone up quite a bit, and they're starting to make some mistakes. I point this past week to them blocking a Google Voice app from their App Store. And they did it because they wanted to maintain control over the iPhone's calling interface, I think. This is the same sort of thing MySpace did a couple years ago. There were folks that were, you know, MySpace was the hottest social network out there. There were all sorts of developers trying to get onto MySpace and build their apps, and MySpace said, hey, wait a minute, don't do that. Facebook opened up and said, we're going to let people on there. They became the hottest thing. Google is sitting there with Android waiting to be that to Apple.
Back to tech. What do you think? What should people be doing with or without tech here?
I think you need to diversify in tech, which means buy the SMH. Buy semiconductors. They're the commodity of technology. I'm bullish on Apple as well. I'm long Apple. I think for the reasons that we just talked about. We've got the consumer coming in September. There's a lot of reason to be long tech. Long term,
you should be bullish on Apple.
You got to be careful about semiconductors.
My clients have been bullish on Apple, and the biggest concern with Apple was, can they encroach and steal some business from BlackBerry? I'm a BlackBerry user, and we saw through their earnings that they weren't able to get that corporate.
I wouldn't want to buy the stocks though that are at
Schiff?
high multiples. I mean, if you're going to buy these tech stocks, you got to buy them cheap. I wouldn't want to buy stocks at 20, 30 times earnings. You got to make sure that you're not overpaying for them and try to get a dividend yield. You know.
Well, the thing is, you know, this market, traders have been overpaying for this stuff for the last umpteen%. That's the problem with these bull markets is they never let you in.
Or
you never get the
pullback.
Look, yeah, whatever.
John Ford, you get the last. Who's
Bill Smead here.
Yeah, 10 seconds.
We own AT&T and Verizon.
Yep.
We would rather be owning the service. People sending us $100 checks every month.
Rather than the hardware.
Rather than the hardware.
Got
and
it.
get the dividend.
Thank you, guys. Thank you to you, John Ford.
Thank you.
Sorry about the diversion into... Breaking news, the FCC launching an inquiry into AT&T and Apple over rejection of Google's Voice app for the iPhone. We have a letter here that the FCC has sent to Apple Incorporated and the Vice President of World Government Affairs asking why did Apple reject the Google Voice application for iPhone and remove related third-party apps from its App Store? Did Apple act alone or in consultation with AT&T? You never want a government official asking you, did you act alone? It's always bad. Does AT&T have any role in the approval of iPhone applications generally? And on and on. So clearly they're taking a very hard look at the situation. We were just talking about this with John Fort. But once again, we have this letter of the FCC taking an inquiry into why it is that Apple rejected the Google Voice application for iPhone and also removed related third-party applications for its app phone. Welcome back. We've got oil prices hitting new highs for the month. Could energy prices shortcut this new bull market? Joining us now is Kevin Kerr, President and Chief Trading Officer at Kerr Trading International and proud oil speculator. Bill Smead is here, along with Steve Grasso, Peter Schiff, and Dan Fitzpatrick are with us as well. Normally I would go to you, Mr. Kerr, first, since we're starting with oil, but Bill Smead, I want to ask you about this when it comes to Apple and the Google Voice app and their relationship with AT&T. Any concerns about this, or just a very active FCC, DOJ, White House, etc.?
I find it amazing. I started with a cell phone in 1989-90 and paid $500 or $600 a month. All I got was the chance to make phone calls to people and receive a few. Now I get all my home and work email
all my stock quotes, all my calendar.
And it's much cheaper.
And it costs me $97 a month. And I got 3 or 4 companies constantly begging for my business. I do not see any concept whatsoever of a lack of competition. And am I being hurt? It's about the best value I get in my life right now.
All righty, that's a good discussion. Let's now get to Kevin Kerr and the price of oil. It's been creeping up here, Kevin. What is going on with oil? And we're worried about it because it could short-circuit the rally if it starts to crimp the consumer.
Maybe we should blame the speculators for the Apple problem too.
I knew that was coming.
I'm not sensitive about this. Look, I've been talking about this all week with the whole talk of let's turn it all on speculators. It was all speculators, and we're not focusing on the facts. That is the weak dollar and real demand tied in with speculators as well. Look, I used to trade in the over-the-counter market. I'm all for more regulation and that these things should be transparent, but let's be serious. Free markets function best when left to allow everybody to participate and not to have false things put in place.
All right, Kevin is making reference to the fact that the CFTC is talking about imposing position limits, et cetera, et cetera. A lot of government intervention talk. Still, Kevin, where's the price of oil going? That's what I want to know.
Well, as we saw today, we are seeing a weak dollar push prices up, but we're also seeing demand pick up and also interest. Look at the GDP was up. That means demand for energy is going to be going up. And the bottom line is people think America runs on Dunkin'. It actually runs on energy. The recovery is going to be based in energy. We're going to see prices continue to ratchet higher. Nothing is different, Michelle. A year ago when we got to 147 bucks, we had $90 of that based on demand. And so that demand is going to come back, and there is no new supply coming online.
Dan
all these alternatives have been thrown aside. Nothing's changed.
What do you think is the commodity picture here and commodity-related stocks?
I think you can make money on commodities right now. I think you got to buy oil, buy Transocean, buy Diamond Offshore. As oil goes up, that's where a lot of the money is going to go. I like Tech Resources. I'm long that stock. It's really kind of almost a pure play on metals and China. Significant part of that company is owned by China. That's where the money's going to go.
Peter Schiff, that sounds like music to your ears, doesn't it?
Well, I own a lot of oil stocks, but I think oil's going up. It was up $2.50 today. It's
Why
just
is it
under
going
70. Up? Well, the dollar's going down. I mentioned earlier the dollar index hit a new low for the year today. The dollar was weak across the board against every single currency. I think it looks like it's breaking down. I think it's going a lot lower, particularly in the fall. I think that's going to push oil prices up. I think we have a shot of going above $100 a barrel by the end of the year.
Let's explain for the novice viewer why it is that when the dollar weakens, oil goes up. We are a very privileged position in the United States. Nearly every commodity in the world is bought and sold in dollars, regardless of where you live.
Sure.
So when the value of the dollar goes down, let me just do the didactic, please.
As the dollar
when the dollar weakens, the rest of the world sees the commodity cheaper vis-a-vis their ability to
Well, an easier way to look at it, Michelle, is when we're buying oil and paying in dollars, as the dollar loses value, we're giving OPEC cheaper dollars. So oil prices have to rise to reflect the fact that we're paying in dollars of diminished value. And I think the dollar's going to lose a lot of value, and I think oil prices will hit $100 a barrel maybe before the end of the year.
So, Michelle, if we're all in agreement that oil is going north versus south at this point,
I'd like to disagree.
Bill, why, Bill?
First of all, I love people in the investment world. The United States stock market goes down 53%. It rallies 45%, and they're screaming bear market rally. Oil goes from $145 a barrel down to 32, and it goes up to 73. And I haven't heard a single person scream bear market rally. I've been in the investment business for 29 years. I've virtually never seen the following 5-year bull market ever be led by the group that led the prior bull market.
Well, look keep your eyes open. It's going to happen this time.
The world is awash in oil.
There hasn't been any demand at this point.
Let me finish my point.
Once demand comes in, I thought that, not to be rude, but I thought that was your point.
Oil
is different than we've seen in the past.
Oil is in a bull market now. Go back 9-10 years ago, oil was under $20 a barrel. Now 70. Stocks are going down. The Dow is lower than it was 10 years ago.
Energy is the most crowded trade I think I've ever seen in my 29 years.
And it's going to get more crowded because there's no
speculators.
And Boone Pickens is always in the news at the top.
Mr. Speculator Kevin Kerr, thank you. Bill Smead, thank you. Dan Fitzpatrick, Steve Grasso, and Peter Schiff. You gotta say it like that with a spittle coming out at the P. Coming up, the new bull market is undersold from Washington politics.